And remember, the nice thing about iron condors is the price can't be in two places at one time. So if the price does run up on us, guess what? The put side of our position is going to dramatically increase in profit, and then we can simply roll the position up, hopefully capture the same amount of credit that we did originally on the upside, and recapture that credit on the upside when we have to adjust. We just did an adjustment on the SPY iron condor, so go ahead and go take a look at that adjustment CD again for the adjustment that we did on the SPY. We'd basically be doing the same thing on this iron condor here. I'd like to get this on as soon as possible, so I'm going to give these guys a little bit extra price. I'm going to go. I'll take 77 cents on that. I'm going to go ahead and send that in, and let's see if we get filled. So now we have to do is kind of take a look at. Let's see. We're going to do cancel replace. Let's take a look at where the current market is. We should get filled on that. The diamonds are a little bit tougher to get filled on for some reason. The bid and ask spreads are very, very nice on the diamonds. They're highly liquid. They really do. They do have nice bid and ask spreads. Sometimes a penny, sometimes 2 penny at the most. And we got filled on that. That's very nice. It took a little while, but we did get filled on it. So we can delete that cancel replace. Now we are in our analyze tab. We're going to delete our simulated tabs because we now actually have our position down here that you can see in our demo account. So our margin has been, our margin requirement was only $600, which was not too bad for a profit potential of about $231 on this trade, which is very nice. So that's a 30%, we can get about a 30% return on margin if we see this all the way to expiration. We're looking for closer to a $100 to $150 profit potential on this position. Once it gets up around $100, $150, we're about 30-40% of our return on margin. Then we're going to start to take a look at taking this position off if the price is like very close to our break evens or something like that. But if it's right in the center, you know, we may hang in there and get the full profit potential on this position. But normally we like to take it off about a week before expiration. So that's how we got filled on our diamonds. Now let's take a look very quickly at our entire portfolio. Right now we have the diamonds position, and this is our portfolio weighted position. So we're still looking very, very good. Our entire profit position on our portfolio as it stands now is about $1,200 for the month, with a margin of $1,600. That's pretty decent. I mean, you can't get a 60, 70, 80% return on investment in a month with just about any other kind of investment that I can ever think of. I don't know about you, but my money market's paying about 3% right now for a year. So this is a very good return on investment. So that's how we did. We entered into a diamond iron condor position. We sold an iron condor. We decided on our support and resistance points. We took a look at the channel to determine those support and resistance points. We have a plan in place in order to profit from this position. As always, this is not a recommendation that you guys do exactly the same position, because this is a time in the past. You're watching a recorded video. So, but this is how we like to build our positions. We have the diamond position on. Let's just take a look at the individual symbols here. We have the diamond position on. We have a SPY iron condor. So we have two iron condors. We have a SPY and a diamond iron condor. We have an EEM, which is the emerging, I always put that third E in there for some reason. We have the emerging market ETF position, a double calendar. And we have the good old IWM position. which is a great position because this thing really moves very much. It did move against us at one point. We had to adjust, but boy, it's a really nice little index. So those are our positions right now, and you know, you can take a look down here. We've got the diamonds, we've got the EEM, the IWM, and the SPYs, and we're pretty much full for this. Those are the positions I like to take on a monthly basis. You know, the ones you take really depend on your situation. But those are the positions I like to take on a monthly basis. A couple iron condors, a couple double calendars, and you know, we're up right around our margin requirement right now is around $1,600 for our portfolio. We have a profit potential, maximum profit potential right here of about $1,400. So you're talking about 70-80% return on investment if we hold it to expiration, but we don't. We don't normally hold it all the way to expiration. We'll probably be taking profits right around the 50-60% level, which is about $500-600, and even $500-600 on a $1,600 margin, that is a 30% return on margin, which is just wonderful. So those are how we add positions for the diamonds, and as always, you know what to do when the prices run against you. You never have to get caught off guard. You can trade with confidence. You can review your positions on a daily basis, and it only takes a few minutes. Make adjustments as necessary, and that's why I always say, guys, trade with confidence.